Hello everyone and welcome back to our channel. Today, we're going to be talking about the importance of business finance to the business sector. Business finance is an essential aspect of any business. It deals with the management of funds and other financial resources of the business. Without proper management of these resources, a business may fail to achieve its goals and objectives. In this video, we're going to discuss why business finance is so important to the business sector. First and foremost, business finance helps businesses to make informed financial decisions. Business finance is a field of study that provides businesses with the tools and techniques needed to analyze financial data, understand market trends, and make informed financial decisions. By using these tools and techniques, businesses can assess their financial situation, identify opportunities for growth and profitability, and make decisions about investments, acquisitions, and other financial transactions. For example, businesses can use financial analysis tools to evaluate the profitability of a potential investment opportunity. These tools can help businesses to assess the potential risks and returns associated with the investment, determine the appropriate financing options, and calculate the expected rate of return. This information can then be used to make an informed decision about whether or not to pursue the investment. Business finance also helps businesses to evaluate the financial impact of different strategies and decisions. For example, businesses can use financial modeling tools to simulate the financial impact of different pricing strategies, marketing campaigns, or production decisions. By doing so, businesses can assess the potential risks and returns associated with each strategy and make informed decisions about which strategies to pursue. In addition, business finance provides businesses with the tools and techniques needed to forecast future financial performance. By using financial forecasting tools, businesses can estimate their future revenue, expenses, and profits. This information can then be used to develop budgets, set financial goals, and make decisions about investments and other financial transactions. Overall, business finance helps businesses to make informed financial decisions by providing them with the tools and techniques needed to analyze financial data, understand market trends, and evaluate the potential risks and returns associated with different strategies and decisions. By making informed financial decisions, businesses can maximize their profitability, minimize their risks, and achieve their long-term financial goals. Secondly, business finance helps businesses to manage their cash flow effectively. Cash flow management is an essential aspect of business finance. Cash flow is the amount of money that flows in and out of a business over a given period. Managing cash flow effectively means ensuring that the business has enough cash to cover its expenses and meet its financial obligations when they become due. Business finance provides businesses with the tools and techniques needed to manage their cash flow effectively. These tools include cash flow forecasting, monitoring of expenses, and making adjustments as needed. Cash flow forecasting involves predicting the inflow and outflow of cash over a given period. By doing this, businesses can anticipate periods of cash surplus and plan for times when cash may be tight. Monitoring expenses is also a crucial aspect of cash flow management. This involves tracking all expenses, including fixed costs, variable costs, and capital expenditures. By tracking expenses, businesses can identify areas where costs can be reduced and cash can be conserved. Making adjustments as needed is another critical aspect of cash flow management. Businesses must be prepared to adjust their cash flow management strategies when market conditions change or unexpected expenses arise. This could involve negotiating better payment terms with suppliers, delaying capital expenditures, or seeking additional funding from lenders or investors. Effective cash flow management is essential for the financial health and sustainability of any business. By managing their cash flow effectively, businesses can ensure that they have enough cash to cover their expenses, invest in growth opportunities, and meet their financial obligations when they become due. Business finance provides businesses with the tools and techniques needed to manage their cash flow effectively, enabling them to make informed financial decisions and achieve their goals. Thirdly, business finance helps businesses to access funding. Access to funding is one of the key components of financial management for any business. Business finance helps businesses to access funding from a variety of sources, such as banks, venture capitalists, angel investors, and other investors. One of the main ways that business finance helps businesses to access funding is by providing them with the tools and techniques they need to prepare and present their financial information in a way that is attractive to investors. This includes developing detailed business plans, financial projections, and other documents that demonstrate the viability and potential profitability of the business. In addition, business finance professionals often have relationships with investors and other financial institutions, which can help businesses to access funding more easily. For example, a business finance professional may have contacts at a local bank who can help the business secure a loan, or they may have connections with venture capitalists who are interested in investing in a particular industry or sector. Business finance can also help businesses to explore alternative funding options, such as crowdfunding or peer-to-peer lending. These methods of funding are becoming increasingly popular, particularly for small businesses or startups that may not have access to traditional funding sources. Finally, business finance can help businesses to navigate the complex legal and regulatory landscape that surrounds funding. For example, a business finance professional can help a business to comply with securities laws when raising capital from investors, or they can help a business to negotiate the terms of a loan or other funding agreement. Overall, access to funding is critical for businesses of all sizes, and business finance plays an important role in helping businesses to secure the funding they need to start, grow, and succeed. Finally, business finance helps businesses to manage risk. Business finance helps businesses to manage risk in several ways. First, it provides businesses with the tools and techniques needed to identify potential risks. This could include risks associated with financial markets, operational risks, or risks associated with changes in regulations or laws. Once risks have been identified, business finance helps businesses to assess the potential impact of these risks. This could involve analyzing the financial impact of a risk on the business's cash flow, profitability, or balance sheet. By assessing the potential impact of a risk, businesses can better understand the potential costs of the risk and take appropriate action to mitigate or manage it. Business finance also helps businesses to develop strategies for managing risk. This could include developing contingency plans for potential risks, diversifying investments to spread risk, or purchasing insurance to protect against potential losses. By developing strategies to manage risk, businesses can minimize their exposure to potential losses and reduce the likelihood of a catastrophic event that could threaten the business's survival. Finally, business finance helps businesses to monitor risks and make adjustments as needed. Risk management is an ongoing process, and as the business environment changes, new risks may arise. Business finance provides businesses with the tools and techniques needed to monitor risks and make adjustments to their risk management strategies as needed. Overall, managing risk is a critical aspect of running a successful business, and business finance plays a vital role in this process. By providing businesses with the tools and techniques needed to identify, assess, and manage risk, business finance helps businesses to minimize their exposure to potential losses and maximize their returns. In conclusion, business finance is a critical aspect of any business, and it plays a vital role in the success or failure of a business. Whether you're starting a new business or looking to grow an existing one, business finance provides you with the tools and techniques needed to make informed financial decisions, manage your cash flow effectively, access funding, and manage risk. Thank you for watching, and we'll see you in the next video.